What you can see there is in the yellow portion between a 75.01 loan to value up to a 90% loan to value. So that's basically less than 20% down up to 10% down in that yellow portion. That's where you can see the highest LLPAs that can be charged. For example, if you look at the bottom for credit scores under 639, and let's say you're putting 15% down, that middle column of the three yellow columns. If you're under 639 and you're putting 15% down, there's going to be a 2.875%. That's 2 7/8 points hit to the pricing on that loan that you're trying to get on your rate because of that lower credit score and that down payment amount. Now, what happens in reality is borrowers don't pay those price adjustments as points. That's too much cash, and most borrowers are challenged with cash. So the way these pricing adjustments are handled in terms of the higher adjustments as you get into lower down payments and lower credit score is that we adjust the rate to absorb this LLPA. So for example, again, 15% down if you're under a 639 score, where you're going to be hit with a 2 7/8 points essentially hit for your lower credit score and down payment amount. What we do is you absorb that through a higher rate so you don't have to pay it in cash. And one of the things I was pointing out last week is interesting to note on this grid, if you put less than 10% down, if you go up to 5% down, you actually see lower LLPA adjustment. For example, under 639, it drops from 2 7/8 down to 2 1/4. So Fannie and Freddie actually give you better pricing if you put less than 10% down when you have a lower credit score. But as I pointed out last week, that ends up getting offset by the PMI company charge, because the PMI companies aren't doing that. They're not giving a break to the PMI premium for a borrower with less than 10% down. They actually hit you harder, and that basically undermines the slight improvement in rate that Fannie and Freddie are giving you for a lower credit score and a less than 10% down payment. So as a consequence, you end up kind of getting stuck in that portion of the grid that's in the yellow. Now compare this to the FHA grid, which is what we're going to pull up next. With the FHA grid, it's much simpler. You can see this. There's a lot less LLPAs, again, loan level price adjustments. And in particular, you can see the spread there. Look at the 600 to 619 line item. You see minus 1.5 is what you will get charged, or what's going to be assessed on your loan, on your rate, 1.5 points essentially of your loan amount. Whereas if you're 740 or higher, you actually get a benefit. You get an enhancement to your pricing of 1/4 point.